am sure the comments under these videos will be very rational and very kind to me. Because surely a company with collapsing net income, trading at a 160 PE, is not overpriced. Let's look into it, why I think Tesla's overpriced, why I think it's a bubble, and at the same time, why I wouldn't short it. If we look, revenue now has been stagnant since 2022. Now, of course, this is a very bad quarter. However, profitability collapsed massively. Why is that? Because while the car business at Tesla is making up less and less of a revenue, well, because it is kind of declining, it is still majority car. And when then deliveries collapse by 13%, that is huge, because factories have a huge fixed cost. And once you go below that break-even price, you make heavy losses. For every car you sell above that break-even price, you make more and more profit. So if your sales dip by 13%, that is huge. That's why the gross profit of a car business declined 29% last quarter, while energy and storage is up heavily. Cybertrucks, the newest car, that is flopping. It's so bad that not even Tesla is willing to trade them in really anymore. You had the huge amount of fans who got them on day one and after. At the beginning there were some delivery issues, but once everyone kinda had their Cybertrucks, who really desperately wanted it, the demand is not there because, let's be honest, this is not a car you get as a normal person who drives around every day. This is something you get as a fanboy. Maybe you're like a bit exotic, you want to have this as like a cool side piece or something, but this is not the daily family car. And at the same time, they're delaying their cheaper car, which is something that would give them a huge breakthrough, which they really need. Last time I talked about the price war they had going on in China, and I got roasted in the comments. You don't know what you're doing, there's no price war going on, Tesla's gonna beat them. Well, the price war's still going on. Companies like NIO, while they're selling billions in cars, they're not making any money. And BYD is currently destroying Tesla in China. Even Xiaomi is getting into the car game. They're kinda late, but they always have solid execution. That is why the gross profit per vehicle heavily declined since the price war in China. And it has been continuously going down. And if you can't revert that, then there's no way around this. Then this is not a good stock. And this was my main criticism last time. That they just do not have the pricing power anymore. Tesla sales dropping across the entire world. Now, while most Chinese don't really associate Elon Musk and Tesla with the US government, the Europeans do. Those have been heavily hit. And also, it's an issue in the US. If people burn down your dealerships, it's not a good sign. I don't at all agree with that. Not at all. Let's say I'm completely apolitical and I'm gonna go buy a car. I'm thinking of maybe buying a Tesla, but then I think, hold up, what if someone vandalizes my car? That isn't a huge issue, and Tesla will have to solve that. Now, they're working together with the government to get that solved, but they need to solve underlying issue. Because you cannot have a 1 trillion market cap by only selling cars in the US to Republicans. And there's the issue. Elon Musk, he is not replaceable. There is no person who can replace Elon Musk at Tesla. Elon Musk is Tesla, Tesla is Elon Musk. Tesla's ability to continuously dilute you, to get huge demand for stuff like Cybertrucks, which, to be honest, is a silly car. It's completely silly, and people don't like it anymore. But there's a huge fan base who was willing to get that car. That only works with Elon Musk. If Elon Musk is gone, this premium is gone. Because as long as Elon Musk is there and is gonna talk about stuff like robots, autonomous driving, this company is gonna be traded like this. As soon as he's gone, this company is gonna be traded like Ford. It doesn't matter if he's right or not. I don't think he's right. I'm gonna go into that. I don't think he's right at all. But as a Tesla shareholder, you're gonna beg for Elon Musk to stay on and continuously talk about it. Because if there's at least anyone who has the willpower behind him to bring it through until maybe eventually in a few years they will have full self-driving, then it's Elon Musk. Now, services and other has heavily declined in gross profit. Their margin actually came down. Why? When they service their cars, a lot of that stuff runs over warranty. And the Cybertruck has been very heavy on service costs. That is one fact why the margins have been dragged down. Now, to avoid that margin compression in services, they're increasing their Tesla locations by 10%, while they're decreasing their mobile service fleet. Why? It is way cheaper if a customer comes to you to service the car instead of you sending an entire team to go to them. That is why service stations exist, and they don't come to you unless it's a huge emergency. Now, they're still building up their supercharger stations, which is nice. This is something where they're really beating everyone else. I gotta admit that I'm not a Tesla hater. I don't hate the company. Their supercharger locations are really breathtaking, how they rolled them out. So this is a huge part of the business. Energy as well, they're getting their foot in there. To go renewable, we need energy storage, and here Tesla is a big player. However, the issue is there is no real brand loyalty in this. Now, they are currently beating their competitors like M-Phase, because especially for current Tesla owners who really love the company, if you want a wall box, for example, you will go with Tesla. There you have a good moat. However, that is the issue. Tesla is becoming a two-sided coin. Half of the people love it, the other hate it. Our society is becoming more polarized. Now, their commercial segment is not as hard hit by that. The giant battery packs, which help stabilize energy grids, they're not affected by that. But private sales are. So they don't really have a huge moat here, other than the huge production they have currently set up. Now, as long as this deployment goes up and up and up, they increase their supercharger locations, which also include other EVs, and EV numbers continue to climb. Then Tesla can make a good amount of money here. But it is still limited. When we talk about full self-driving, something that was promised year after year after year after year, it is not there. And Waymo is beating them there. Waymo is offering full self-driving in many cities. They're exploding in trips. 9 months ago, they were at 100,000 paid trips per week. Now they're at 250,000. Now the criticism from Tesla is that the technology Waymo uses is 1, expensive, and 2, only works in pre-mapped areas, aka cities. And that if Tesla solves it, it's gonna go everywhere, no matter where. They're always gonna be able to drive. Now the issue is, the biggest market behind this is the robo-taxi business. And I don't know about you, but when I take a taxi, it's usually from somewhere in the city to somewhere in the city. And this is where 90% of the use case lies. For something like the Tesla truck, it will be very important to have full self-driving everywhere. However, it is still gonna compete versus rail then. Because no matter if you have no guy in there, it's still gonna be in there. And even if Waymo is more expensive at the beginning in cities, yes, the hardware cost is bigger. But over the lifetime, it's not as important. So I really see Tesla's advantage in the energy business right now. They need to stabilize their car business, try to get full self-driving through, but however, I don't think they're gonna have a first mover advantage anymore here. And maybe then after 4 years of no stock movement, we will see gains again. I'm leaving out the robotic part of the business because it is just speculative. Like, of all the business parts, full self-driving, you have at least working software that works in most cases already. It's not good enough to be full self-driving on the road, but it's at least there. They're not gonna be able to compete there. Tesla wants to bring out a robot that replaces a human. One-on-one works like a human. That is very hard. You can have robots replacing each individual job very effectively. But why would you want to make a humanoid robot that is only either going to be used as a personal servant or in some very specific sales situations? But overall, robots are usually heavily dependent on their use case because they are just more effective there. Plus, Tesla is late in the game. There are many more companies who are way more ahead. Back to 2024. Unlikely, with all the issues that are happening. And they just continue to grow at around 5%, way faster than the normal car market, still gaining market share, which I do not think is gonna happen. Energy might continue to grow at 15% for the next 10 years. Services and other probably in line with cars. And because energy is so small yet, it won't really cover the rest of auto, the entire company might only grow at 8 to 10% for the next few years. Now that is not bad growth for a car manufacturer, but not at 165 PE ratio. When it comes to profitability, it has recently collapsed. But I think that is a one-time event, so around $3 per share. The car business is gonna grow slower, 5 to 8%. Energy business will probably continue to outperform, growing around 15%. However, it's still small, like I said. So let's just be optimistic, very optimistic, and say 18% growth rate for the next 5 years. Something we haven't achieved in a long time. 13% afterwards, 20 multiple. Just so you know, this is a very optimistic assumption. Then we come to $86 per share. A little bit below where we are today. Now, what if it goes perfect for Tesla? Perfect. 25% growth over the next 5 years, 20% after that, 30 multiple, still below where we are right now. And what if it goes worse? And with worse, I just mean around assumptions. 5% growth in the auto business, faster growth in the energy and service sector, but because it's so small, still less. 12%, 10% afterwards, and then it's a normal car company slowly, 10 multiple, 30 per share. No, I just noticed I misspelled Tesla, by the way. I'm sure it's gonna be very kind of comments about that. It just doesn't make sense. I will never short Tesla. Maybe Elon Musk will pull something out of his ass, but it just doesn't make sense. This is not value investing, this is speculating. Before the huge explosion in 2021, you had at least the possibility that Tesla would become a leading car manufacturer, which they did. But now there's no real upside anymore. Full self-driving, but there's a lot of competition there. Robots, also a lot of competition, and they don't really have a good product there yet, so I don't really see the benefit. What do you think? Write down below. Have a good day.